What's going on, goats? Welcome back to BooKoo Bucks. My name is Raymo, and today I'll be breaking down my break-even trade on GU futures from this morning. Let's go ahead and show the executions. Here is the entry, and then here is the exit. Now let's go ahead and break down exactly why I took a short position there. So ultimately, the analysis was quite simple. If you guys understand my higher time frame analysis, I am bullish, but I really didn't use the higher time frame. I was simply looking at this immediate range from this low up to this high. So right here at the opening of London, price was all the way up here. I was anticipating price to pull back into discount before pushing on higher, which technically did, but in this point in time, price had not pulled back yet. I was anticipating price to pull on back, so I was looking to see if I can capitalize on that short opportunity. So anticipating the pullback and also seeing that price took out that previous high, which is obviously going to be buy sell liquidity. Seeing price took out buy sell liquidity, I anticipated price to fall on lower. So I simply went down to the 1 minute time frame to see if I could spot an opportunity. In case you guys don't have this indicator, if you have this off, this is how your candlesticks are going to look. Ultimately, there's three things you can do. One, you can trade price action for what it is here. You can still see structure if you have the trained eye for it. If you don't, or just simply want an easy tool to help with the eyes, use this indicator here, and you can see the gaps get filled and make it a tad bit cleaner. Also, I will show you guys in a few minutes that you can use GU Forex. You can use that chart to see price action a tad bit cleaner. And ultimately, it's just basically the exact same thing. So let's go ahead and first show you how you can read price action without this. Here you can see price gives a pullback and makes a new high. So at this point in time, I was marking this up as the structure low, and then I was marking up the high as the structure high, just like this. And then once price broke underneath the structure low, I decided to identify this as a break of structure. And once again, I'm anticipating this to be a break of structure and not a structural inducement, mainly because we just took out this high level over here. I deleted it on accident, but we just took out this high over here and anticipating the pullback, and the M1 is looking that it is going bearish. So, seeing price made a new lower low, I simply pulled a fib out from swing high to swing low, waited for price to pull back into premium as it did here, and then took a short off of this bearish engulfing candle. There's the entry here, and the stop loss goes above the M1 high. It goes above because if price is truly in bearish structure, price should not break above the M1 high. So price or the stop loss goes up there, and then I'm looking to target discounted price points. And then from here, if I pull the fib back up from low to high, we can see that we can shoot for potentially the 50%, which gives us about a 1 to 3 and maybe even deeper into discount. So potentially it could be a bigger RR. But ultimately, I was looking to just catch maybe to the 50% here. So as you notice, price did go in my direction a tad bit, but ultimately price pulled back. And um, once price went lower in my direction, I moved my stop loss to break even. And then as you can see, price pulled back and then tapped my break even position before pushing on lower. So here, the reason why I went to break even is because price had already fallen a good amount. Also, I went to break even maybe a bit sooner than I probably should have, or technically I did go to break even sooner than I should have because obviously price did go lower. But the reason why I was a bit more aggressive was because I understood that this was a retracement play. Understanding that I am taking a retracement, I understand the probability of price or me catching a good setup or a winning setup with the retracement trade is a tad bit lower than going with the continuation move. And then just understanding that price can reverse and go bullish at any point in time. And I, once again, as I just stated, I understand that I'm taking a retracement trade, and I truly don't know if price wants to come down into discount at the 50% or even deeper. Price could have reversed from here and continued to push on higher. So for those reasons, I went to break even. Price stopped me out and then pushed on lower. So that is basically the break even trade there. I will plot up how you could potentially use this indicator to help your eyes out. If you notice, if you turn it on, you can see how this pullback is very clear and this push is very clear as well. So nothing really changes. If you want to, go to GU Forex and pull up the charts there. And let's see if we can find it right here. So this is the exact same price action or the same time as the other price action. So if you notice here, price also gives you a break of structure from this low. Price pulls back into premium. and then price still gives you a bearish engulfing, and then price dropped from here. So that's basically it. If you guys have any comments, questions, or concerns, please drop them down below. Thank you for watching, and I will catch you in the next one.